It is no mystery that the broader markets are facing some pressures to the downside. There is a pending signal on this asset that can be fired off as soon as this coming week, and maybe even on Monday, as our buy-daily closures happened on Friday. Welcome back to the channel on this Saturday. This is ARCa, and let's dive into ticker symbol TSLA. Let's kill him, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol TSLA, and what you're observing here is first the 5-minute tiny time frame, right? So the reason why I want to point this out to you is because there is some pending dangers here as soon as the immediate short term, right? So please remember that I am using the 5-minute and the hourly, right, usually for day trades here. So, and the reason why I'm pointing this out now is because there is a great amount of pressure to the downside that could be accumulating here, other than the fact that I have ran a statistical backtest of volatility versus momentum on the buy daily, in which we're going to go over in just a bit. But please notice here that we have a closing basis candles here beneath not only the SMA 200, but beneath the SMA 50 on a 5-minute time frame, and more importantly, the EMA 200. Right, so it's not to say that we can't actually run up here, even run into even beyond the EMA 200 for, to eventually make what could be a lower high structure here before continuing on to a downside. But I just wanted to point out that there are those pressures there with the moving averages, right? So there is a buy daily formation here that's known as a rising wedge, right? This gives us a psychological target that we can observe first. The first target would be taken from the breakdown of the first candle closure without any clean close, right, beneath the regression here and the conversion of support into resistance. So that is actually giving us the first target for us to evaluate, and that is looking like it's giving us a target of about 23.17, which is very, very close to the 0.786 Fibonacci ratio here. And it is confluent, right? So the second target to observe here, in case we are going to honor this breakdown from this formation itself, would be this target here, right? So let's go ahead and take a trend line from the top side to the bottom side of the formation and apply it to that clean break of this candle here, and move it just slightly to the side and see what's up, right? So yeah, it's giving us a target of targets that we've already kind of been looking at, right? And I will tell you that this target is very similar to other targets that we're going to go over in just a bit. So please remember that this is suggesting for us to go down into the area of around 204, right? So 204.06. So let's move on to the statistical side of the analysis so that you can kind of see what I am doing here, right? So this is a volatility volatility on a linear scale, BBWP by the caretaker. Using its iterations of contraction into expansion paired with stochastic momentum for a downside backtest over its entire trading history on a buy daily time frame. These are all the samples here, right? So there have been a total of 35 iterations, of which 29 were guessed correctly to the downside, right? So we get an average downside accuracy of about 82.86%. with an average breakdown of 14.7%. And this is why I'm telling you that it's very curious. So if we were to decline from the current price action right now, 14.7%, then that right here on this metric, 14.7% puts us at 202.95. The psychological target and the secondary target, right, from the wedge is giving us 204.06, which is completely confluent to the target that we're looking at right here. And not only that, it's very tight to the not 236 Fibonacci ratio. So now we have psychological targets leading to that downside. We have geometrics and statistics leading to that downside. So the statistical analysis here, that's a mean, right? So I have calculated the standard deviation on this as well. So, I think I may actually have that over here, that drawing of sorry, I didn't get that. Sorry, I didn't get the bell curve drawn out here, right? But I forgot where I had it. But, the standard distribution bell curve, the 68% of the results is landing at 9.90% as a decline, right? So from whenever the signal fires, and we'll go ahead and go over those conditions just now in just a bit. Okay, so we have a 9.90% decline when the signal fires as a first standard deviation. I have also calculated the upper bounds and lower bounds of the first, second, and third standard deviations, right? So the immediate targets that I'm looking for, of course, 4.81% decline, which not sure where it's going to put that. Now, remember, these are going to be completely speculative, and it is in a sense rhyming with our potentials, right? So we take that trend line, right? We apply it right over here, move it to the side slightly, and it's giving us a target of about 224.05. And statistically speaking, if we were to drop from where we are right now, the 4.8% move to the downside is giving us 226.44, which is already confluent again to the target that we're looking at from the psychological take profit here, right? So yet again, right, we have a confluence to geometrics, statistics, and psychological targets. So looking very good, at least for the immediate short term. Now, that move, just please know that it's not nonchalant here, right? I really am talking about close to a 30, 35, 40% 40 point move to the downside. So it's quite significant, right? And it's showing on a psychological scale too. So yeah, I just want you to know that we do have almost 83% chances that this can happen. But please remember that the conditions are these. Anytime that volatility has contracted into the critical contraction zone, we would need the volatility component, the spectrum line here, alongside the white moving average, to pivot to the upside and move beyond the 15% threshold here. So as soon as we get that 15% threshold crossing, or both of the component and the moving average crossing above that 15% threshold, then our signal is officially fired. And I want you to notice here that stochastic momentum is completely on a nosedive right now, right? And getting close to the gravitational zone here to enter the bearish control zone. So that's also another potential, or another reason that this asset is due to face kind of a correction here. Not sure that it's going to be one. Not sure there's going to be a main correction, but for sure, right now, there's definitely things that we need to look out for, right? By daily time frame gap, located right down here to fill it, right? That could be the space that we could first be looking at in a very, very discretionary manner. So let's go ahead and take into account 225.45 to about 228.20, and that's going to mark off this the space here between this these candles here. So that could be a spot for us to look at as an initial support before we bounce to the upside and validate the current candles here. Maybe the 234.95 to about 236.33 for a continuation to the downside, as Tesla tends to wiggle around a lot on a daily basis, right? So I want to remind you guys that actually my very, very, very last, and I promise this is my last 16-week mentorship that I'm going to be teaching and or going over here with I opened the seats for 30 students, of which now I believe I have only 8 or 7 seats left, and we are due to start this coming week. The course, right? So this is going to be for my track 4 students. So track 3 already started. They are about 6 weeks ahead, and tracks 1 and 2 already graduated with with their gifts and everything. So this marks off over 100 students here for the ARCa Pools team, and very excited to be teaching this last one team, as I do need to focus on the new Discord. I need to focus on the members there. And I'm going to give this last shot here for the master students on track 4 to benefit from this. But I will no longer, actually, you know what? As of today, I officially switched it into a 17-week mentorship program. So please go ahead and get in touch with me here for the track 4 students, as there are very limited seats left, and I will not be repeating this course ever again. So please, team, go ahead and get in touch with me at, I'm going to type it in here before we finish off the analysis on Tesla. And it's going to be ARCa Masters Course at Gmail. I hate it when ARCa Masters Course at Gmail. There we go. I have the mic all over my face, so I can't actually see the keys down there. So I have to, kind of best guess it. So ARCa Masters Course at gmail.com, team. Reserve your seat. I'll pass over the syllabus and disclaimer, course material, and everything as soon as you do reach out to me. All right, team. So yeah, let's go ahead and continue on the analysis here and see what's up, because I do have another outlook for us, and that could be in the form of a broadening wedge, right? So it could be just like this, and I want to say, I mean, I wanted to start it honestly there, but this could very well be it here. So what you're looking at here is an ascending broadening wedge. So this is a bearish formation, right? And I will say that we are. Let me just make the final little adjust. Oh, I see it. Right. There it is. Okay. So I will tell you that this is running the golden rule of three perfectly, right? So we're experiencing test number one, test number two, fake out, test number three, and test number three signals the bears for entry. And this is going to be I mean, we've already touching perfectly at that support bottom. And this formation here is an ongoing formation through the bear cycle that we've witnessed here for the last, since November 2021. And both of its descending and ascending variety are just incredibly common. And this is essentially saying that we have a downside coming in. And the way to determine what that bottom side target would be, it would actually be taken from the genesis of the formation. So in other words, this is suggesting that there is a bottom side target to be faced at 231.15. Right, so 231.15 is a little familiar, right? Because we do have the 224.05 as a psychological target, and more so then we have the target of 226.44 of the statistical downside here, 4.8% to the downside, which is the lower bound of the first standard deviation. So that's already rhyming. It's rhyming here with our secondary larger time frame formation, right? So and then. Beyond this, of course, we could actually come back up to that 234.89, validate the resistance, and then continue onwards, of which then I can see us start to attempt at penetrating the invalidation zone of this entire top side of price action, right? So any candle closure down here that with a daily closure beneath 226.49, immediate pressure, right, for the downside. This could actually, capitulate to very, I mean, all these targets that I'm looking at here are very temporary bounce targets, right, that we can face. Like for example, drop to the 220 area, resist right from this gap area right in here at about 222.49, and then eventually continue here to the critical pivot points, of which I can already see be between the areas of about 215.04 to the bottom here of the lows in August 2023 at around 212.43. So if we are looking at that 212.43 as a potential target, or the range of it, right? I'm going to just go ahead and leave it like this. Then that is already being seen from the statistics here. And you can see it right in our discretion, 205.60 to 201.61, with a focus of an adjusted 204.06, right? So that's going to be our focused zone. And that 204.06 just so happens to be right down in here. So let's go ahead and mark it off to see exactly where that is. And I'll put a trend line there. Actually, you know what? We'll just do one of these numbers here. So let's see how it rhymes with other targets. Yeah, it would be in the lows of this area here, right in here. So that's technically what's being suggested here in several ways. And please remember that the conditions for us to start this decline are, as just like I said, we need for volatility to cross the 15% threshold, right, with the upside here, volatility component and moving average, and also have a continuation to the downside on momentum. And I will say that this is the second iteration on the bi-daily time frame historically that Tesla has. This is the longest time that it's ever been in, the second longest time. The first longest time is for an iteration of a 10 count back here in January 2013. And that was actually for a pretty large upside move. And we're facing the direct inverse right now, where we're at critical contraction for 6 iterations here, of which in 2020 2013, it had 10 iterations. So every single bar that closes here, it's a buy daily bar. So anytime that there's a buy daily closure while still in the critical contraction zone, we'll get a blue bar there. So please remember, team, that this is what I'm looking at for Tesla, and there is a large move that can be had here, but we are waiting for the conditions to fire. And I've been talking about this for the last 4 or 5 days already. You know, we've been kind of witnessing and experiencing the downside since before it happened. All right, so I think this is a pretty good place to leave off. Please remember to subscribe to the ARCa Masters course. That this is the last time I will teach that course. And also, team, I'll go ahead and leave the link in the description below for you to join the Discord and the ARCa Bulls trading team. I trade every single day live in the Discord alongside the members there. So voice and you're catching me at the before market open, right? Or actually right at 6:30 a.m. We're in it. And pre-market preps, usually I try to make some live streams at night. I'm going to be transferring the live streams maybe from YouTube into completely Discord. So it's, to give the shout out there to the bulls inside of the Discord. So thank you so much, team, for joining up. Let's go ahead and cut this video here and get a good night's rest. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 and forever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your weekend, and I will catch you at the bell on Monday. Adios.